Derek, what side of town do you live?
That's I'm like right off, right? So that's right by the giant. It was nice living there because I used to be able to walk.
Yeah.
That's the best versus a logical bus route. Nowhere.
East Carmel. My actual office is Guilford and West Carmel Drive, so about a mile and a half. What's the sellers of that listing of items? Are they downsizing or?
No, I think if I understood them correctly, because so they were at the house before the open house started. They left actually after the open house started. Funny. They're moving to a lake. They wanna be on a lake and have lake life.
Like,
Don't know. Yeah. So they're just getting out of the area. The house has been on the market for 30-ish days, I think it is. And that's the second time I've done an open house there. They've had one every weekend.
yeah, it was certainly unique.
Well, I think that's why it sat for 30 days, because
Yeah.
of that Spanish style and the step down and the
Yeah, just how.
sectioned
It's
almost.
just just like. Or like I was trying to understand the flow, like how do you.
Yeah.
Well, and I think to some extent, I gave this feedback to Mike too. The downstairs where they have that golf equipment all
Yeah,
set up.
yeah.
I think that might be turning off buyers a little bit because it feels very chaotic in the basement.
Well, right, and it's cool that you can do it down there. I mean, that's what they're trying to show people is you can do stuff like that,
Right.
but it's not a big basement for that price point.
Yeah.
Kind of.
Yeah.
But we'll see. One of the potential buyers that came through, they love the neighborhood. They want that neighborhood. But there was not enough sunlight coming in because it sets down. So I'm looking to see if there's anything else in the neighborhood that may give them more light.
Yeah. Well, I was gonna tell you, like, if you have any serious buyers that are looking in there, Tina Smith is with Century 21 Keys.
Yeah.
She's lived in the neighborhood for 30
Okay.
years, and she just has, some realtors who live in those areas. And just,
Insider knowledge.
yeah, so she's always has properties coming on.
Okay.
But that's just just be a good person to communicate with, because it is it's a huge neighborhood.
No.
And that section right there, the Windpoint section, is actually limited on how many homes. Bay Hill's bigger, but
Yeah.
reach out.
Yeah, I will.
Yes, I'm gonna shoot. All right. Well, it's a couple minutes till, but I think we can go. Everybody ready? All right. So let me. This will be kind of informal as well. In that I do want it to be interactive, so that we can almost structure this to help individually what you guys want to get out of this. So I'll give you a quick background on myself. So my name's Mark Kuchik with Cross Country Mortgage. Been in the business 30 plus years. I've had the good fortune of helping over 5,000 families purchase homes. My biggest strength to you guys as real estate agents would be my 4 pillars of value that we provide that are all designed to help you guys increase your sales, increase your productivity, and allow you to run your business much more efficiently. Okay? So pillar number one for us is our thorough and extensive pre-approval process, where basically operates 7 days a week from 8 a.m. to 7 p.m., 364 days a year. We literally close on Christmas Eve. And I say that because we work with you, and we've been in the business long enough. Not every lender's available. And sometimes it can stop the momentum of you making an offer or things like that. So we're operating 7 days a week, 364 days a year. And our process is this: we don't leave any stone unturned. What I mean by that is we not just tell you, does your client qualify? We tell you, how can they qualify if there's any challenges. We come up with game plans and figure out ways. And then we have a closing record, second to none. We, in fact, are so confident in our closings that we guarantee them. We have a $5,000 on-time closing guarantee that we basically give the seller. And I'll get into a little bit more of that in a minute. But pillar number two is our offer process, and I'm proud to say that last year, 2025, as well as 2024, we were the number one purchase loan originator in the state of Indiana. And a lot of that was due to our 7 elements to a winning offer strategy that we put in place to help get offers accepted. The idea is this strategy, and I'll share a little bit with you because it's relevant from a financing standpoint. The whole strategy is designed to eliminate competition should your buyer be in a multiple offer situation, which we're not seeing right now a whole lot of that. However, 2 weeks ago there was a listing that came on, and 54 showings within 24 hours, 12 offers, and it went for $200,000 over list price. So it's still happening, not as often, but I'm telling you, once the snow goes away, the weather breaks a little bit, we will be seeing a lot more multiple offers. We win a lot of those because of our strategy. Now, let's say it's not a multiple offer, we can still help get better terms because of our strategy. I'll share this with you in a second. Pillar number three is our service advantage. We take a lot of pride in how we do our business so that your buyers do not spend any more than 60 minutes start to finish in the mortgage process with us. And a lot of that is kind of funny because technology today, everybody's got all the applications. And we fell into that trap and send out these links and tell your buyers to go ahead and fill this out and we'll get right back to you. And guess what happens? They don't fill it out. Or they start it and don't finish it. Or they start it, finish it, and the information may not be accurate. It's not like they didn't try to mislead us, but it's not right. And now all of a sudden, you're from your side of it, your clients take much longer because they procrastinated getting the application. When we talk to your clients, we get introduced to them. We're taking a phone application model, and inefficiencies, we get the full story day one, and we get them going. And then pillar number four is we grow together. And what I mean by that is we are constantly doing things to help you grow your business. We do a lot of training. Jenny has been to a couple of our sessions. My goal personally is I want to help you make more money. I want to make your life easier, and I want to make you look good in your time. And so we do that through a lot of real estate training. I've been in the business a very long time, and for 20 years of my career, I've been coaching myself. I still am. So I pay a coach and mentor to help me get better. And the coaching programs I've been in are actually for both loan originators like me, but also real estate agents. And so I take everything that I learned and I share that with you guys. So there's constant things that we're doing, usually anywhere from 1 to 4 times a month. We're doing some sort of realtor training to help you guys in those areas. So with that being said, if we go around real quick, I'll start with Eric. Just give me an idea of what you were hoping to get out of today.
Well, Eric, I was I'm pretty new. I got my license 3 weeks ago. I'm definitely just trying to figure out like everyone that I want to work with, and I know that my dad mentioned that you're like one of his favorite people to work with. So I just wanted to know all that you had to.
Right, perfect. Jenny?
I got my license in April of last year. For me, I've had 3 mortgages in my life. Under my 3rd one, still don't understand anything about them. So just kind of removing the veil there.
My name's Isaac. I'm also relatively new to the real estate thing. Got my license in August. My goal here is kind of, to be more informed and give my clients like a better, understanding of what they can expect out of a loan origination process, just so that, when they come to me and ask questions, although I, obviously tell them I'm not a professional, I can at least say, oh, I recommend them, they can do this, this, and this.
I love that. And the reason I love that is, I've been saying this, and Jenny's probably going to say this, you guys are the first line of communication with buyers and sellers. And there's a lot of hesitation of people they're just simply not sure if they should proceed today, right? And although you never want to, like I would never tell you, try to know lending stuff because that's not your job. You do need to know enough to get them to that first. Because at the end of the day, when buyers and sellers hesitate, why do you think that is? Yeah, what are they not sure about?
So much the process of it, I think that this
Yeah, there's a lot of different reasons, but most people it's financially related. Is it the right time? Should I wait for rates to drop? Should I wait for home prices to drop? Right? And so they're uncertain, but it's usually tied to the financial piece of it. They don't want to make a financial bad decision. And so knowing just enough to get them to want to inquire with me or whoever the lender is I think critical. Once they get in front of the right lender and we talk through things with them, they start to realize, oh, yeah, it's not as bad as I thought. Well, I didn't know I could do it with no money in my pocket. I didn't know I could have a payment like this. So you're right. Crystal?
Working. That's the
Okay. And we're going to cover a lot of different things here, but I do want to kind of touch a little bit more on what Isaac was saying because this has kind of been my personal focus, and I've even had to reframe my conversations with clients a little bit because there's, so just to give you an idea, back in when COVID happened, 2020, we got shut, everything was locked down, right? Nobody was leaving the house, this and that. When the economy came, it was screeching home. So what did the government do to help the economy? Well, they dropped rates. And so low interest rates gives people incentive to go buy stuff, especially homes, right? Well, we ended up selling a lot of homes. You guys may not have been in the business, but it got very, very crazy. Like we saw home values go up at a very rapid pace. That story of 54 showings, 12 offers, that was a normal transaction. That was happening all the time. And I hope we never get back to that because it really, the long run, it was not a healthy real estate market. Well, we're selling too many homes. So now the federal government had to slow down the economy, slow down consumers from spending money. So guess what they did? They started raising rates. They raised them 11 times starting in October 22. And so now it's this whole thing to slow down the economy. So I think they accomplished their goal. Things came to, we saw mortgage rates at one point hit nearly 8%. And it did slow things down. The problem is, we have high inflation, high interest rates, home values have gone up. And guys, these are all tied to some of the objections that you'll hear. Because I don't know that I hear this as often as I did maybe a year or two ago. But we saw home values go up so fast. People are like, inflation was 9% for a while. Home values were going up 10 to 15% a year, which is not normal. Normal is 3%. So we just saw this rapid increase. Mortgage rates are at 8% almost, and everybody's thinking this doesn't slow. something is going to happen. And so then you started hearing people talk about housing, this and that, and you guys are may not remember back to 2008, but in 2008 we had a big problem in our real estate. Right? I don't know if you guys remember, but real estate collapsed. We had a lot of foreclosures. People lost their homes. I mean, it was pretty bad. And so some people who lived through that also kind of, again, I don't feel or sense that many people are thinking like that this today, but some still are, and especially a year ago, is with all the stuff going on, we live in 2008. And the answer is flat out no. Because everything that happened in 2008, none of which is happening today. And the reason I'm bringing this up is because you guys have to arm yourself with, because these are typical conversations that we have. Because 2008, the reason we had that problem is, number one, we were giving loans to everybody. Barely had to qualify, you got a loan. Today, everybody's extremely well qualified. In fact, mortgage delinquency rates are at a 25-year low. So nobody's defaulting. Right? We had overbuilt homes. We had 4 million homes for sale in the United States back in 2008. I don't know today what it is. It's probably around 1.6 million. So 2.5 times. Sorry, we had 2.5 more times back then. And today we have like 23 million more households in the United States than we did. 23 million more households today than we had in 2008, but we only have like a third of the houses available. So back then we overbuilt and we had too many homes, and now we have the opposite. We have not enough homes, and there'll be years before we even get there because builders, when the market started recovering from all of this in 2010, 11, 12, 13, the home builders were like, no, I'm not building. Some of them financially were out of business. And the ones who stayed, they were very scared and cautious. They started building again, but very cautiously. And so from 2010 to 2020, that decade was the least amount of new homes built in the previous 50 years. Think about that. And so we're growing, like our population is exploding, and we're not building any homes. So now we have the direct opposite. We have oversupply, now we have undersupply. And if you understand supply and demand principles that go back literally thousands of years, if you have something people need and there's not a lot of that product, I don't care if it's a paperclip or a pen, right? If you've got something that there is not a lot of, people will pay more. And that's what housing, that's why we saw that. Now, again, people saw that run up in prices of homes from 20 to 22 going, oh gosh, these homes are overinflated, this is not good. But if you look at a 60-year graph of home appreciation, every year, on average, 2.5%, 3% a year appreciation. Like we can go back 60 years and look at it. Just straight line going up, and then 2008 happened, we went down, and then it kind of came back, and all of a sudden, 2020, it shot back up. Like guess where it put us? On that 60-year trend. So arguably, we're not overinflated because it's still on that line. That makes sense. And these are the fears that your buyers and sellers have, right? And so educating them with facts, because that's the thing that when I asked a group of realtors recently, well, I asked them, do you know where interest rates are? And they're low sixes for a 30-year loan, and we're in the mid fives for a 15-year. Mid fives, guys. That's pretty darn good, right? And some of the home builders are even promoting interest rates in the fours. And yeah, with all of that, we were staring at 7.5% not too long ago, years ago. So we got these low rates, lowest rates in 3 years. Why are people so hesitant? And that's the magic question, right? And that's where we all come in as trusted advisors. And I mean that sincerely, trusted advisor, because you guys did not go to school to be a realtor. You went to real estate school, right? But you got to realize your client is looking at you no different than their attorney, their CPA, their financial advisor, or even their doctor. That's how they regard you as a trusted advisor. And so I want you to think that way, because most people have heard this out of a realtor's mouth all the time. Oh, well, Mark, you don't understand. I'm just a realtor. That's what I hear. But guys, your clients see you differently. Just because you did not go to college like for 4 years to be a doctor or a lawyer, doesn't mean that you shouldn't show up. Right? And I don't know if that analogy makes sense, but your clients are really counting on you to be there and be the expert. So you gotta take that, for what it's worth. But when I talk to people about realtors recently, when they said the rates are at 3-year low, why are people still hesitant? And the common answer I got was, well, you just don't know. The buyers and sellers, they don't have all the information. That's what it came down to. And I said, oh, so, well, let me ask you guys this. Do you believe in your heart that today is a good time to buy a home? Like, not to put you on the spot, Eric. Why do you say
Because I remember hearing all about, it's not necessarily just about the home that you buy, but you want to also shop for a home. And there's also just a lot more movement than you think, because you always hear from like a buyer's perspective, it always does seem bad because you're blindsided by the cost. So it's like, oh, that's a lot of money, because I think a lot of times as realtors, you forget it is almost always the biggest purchase of their life. And it looks definitely very scary because most people aren't going to spend that much on anything else. But there's so many options that you can do to really think about it. It's usually a little bit better than
But here's the thing. People make decisions typically on fear and misinformation. Misinformation comes from anybody at work. They're talking over coffee. It's like, why would you buy a house today? And people will literally make that decision based on some guy at work who doesn't know about real estate, right? Or social media news. They all talk about what's happening nationally. And I want you to understand this too. Like, this kind of summed it up for me very quickly when Mark Zuckerberg, the guy who founded Facebook, I don't know what year it was, 2018. He had to testify in front of Congress. He was getting drilled by Congress. I don't remember the context of it. But whatever the question he was asked, his answer was, "Look, my only job is to sell advertising." So think about it. Selling advertising is the number one focus for social media. How do they sell advertising? They get you emotional, and it's usually negative stuff that gets people, right? And so, clickbait. That's they bait you in, and they try to make things as negative as possible, so you read it, and half of it's not even true, or it doesn't apply to this market, right? So if you're talking to one of your clients, trust me, that's what they see and hear. So when they're hesitant, it's because they're hearing all this other stuff. So you guys have to be the vocal reason and social news, because when I wake up in the morning, you guys probably do similar. You look on your phone and you go right to the app for weather, right? What's it gonna be like today? You don't pick what's the weather in the United States today. You pick what's the weather in Carmel, Indiana, or Indianapolis, because that's all that matters to you. Real estate's no different. But see, when they get online and they listen to social media and news, it's all national, so it doesn't matter. Right? Not only are they picking out the negatives, and there's no question, there's always negatives. Like the state of Florida, we saw, they saw values drop quite a bit there. But that's not. Right? So you guys we want you to be armed for that, because buyer hesitation is real, and I personally think the agents who are prepared after my conversations with their clients and are calm having the conversations, they're the ones who are going to be successful today. Momentum, think about it. A lot of people are waiting for the perfect opportunity. There's never a perfect opportunity. I had a guy, I can't believe this, I met with him, a home buyer, met him last October and September. He literally had started the process in 2017 or 18. And I couldn't believe, like, can you imagine? Like, to watch home values go probably double is what he has. And that's because nobody in his life stepped up as a trusted advisor. Whatever realtor he talked to didn't help him as a trusted advisor. And I can tell you that I've worked with a lot of realtors. They'll introduce a client to me, and I'll never really hear from the client. And I'll ask the realtor, hey, we heard from Tom or whoever, and then well, he's gonna wait till the spring. He's gonna wait till fall. And I'm really confused because in the realtor's tone of voice, it was okay. I'm thinking, you guys are sales, right? And it's not about you getting paid as much as I want you guys to think about your core client, because if client says I'm going to wait because he wasn't sure, um, he's going to come back into the market at some point. And what's going to happen? He's going to learn, oh, right? And so in the end, they're going to pay more. There's a cost of people waiting, and so that's the unfortunate piece. Is I'm all about not. I'm probably the way I'm probably I'm a horrible salesperson. I will tell you, because I hate sales. Like I don't like to be sold. They always say, well, salespeople like to be sold. I don't like. I go. I don't want to. I don't want to be sold. Right? So I take that same approach with my clients and your clients. When I talk to somebody, I lead with education so that they understand the real scoop, what their options are, and then from there they can make their best decision for them. If they want to wait 6 months or a year, perfect. Good for them, because at least now it's based on facts, not fear and BS from the. Does that make sense? So I'm going on that because I think for especially newer to real estate, it's an uphill battle anyway. And if you're not armed to overcome objections, it's going to be that much. So okay. So yeah. Oh, I'm sorry. Um, okay, so Jenny, you said you've gotten 3 mortgages in your lifetime. So when you got a mortgage, how did you pick your lender? Where did you
One, I've had a mortgage in 3 different states. I was in Wisconsin on the first one, and I was a single mom, so I was just looking for somebody who would work with a single mom. So that's how I found that one. In Ohio, I moved there because of the job. So Cardis helped us find our lender that time.
Okay.
And then when we moved to Indiana, a kid, well, he's not a kid, he's a guy I grew up with. He is the wealth management person for Elements Financial. So I reached out to Zach and said, hey, Zach, who do you recommend? And that's how we got it.
Okay, good. And I think that's important too. So you arguably you sought out recommendations. Now your reload, you're kind of tied to that. Which, by the way, I'll share this with you. We do a lot of reload. A lot of these bigger companies will contract with artists, and there's a few other reload companies. And they have their preferred vendors who
Yes.
actually pay you.
Mm-hmm.
You do not have to use them. You get your employer is giving you usually a relocation package to pay for moves. Sometimes they cover closing costs to help facilitate. A lot of people are assuming you have to use these mortgage companies to be able to get that. You do not.
Yeah.
So the reason I say that is some of those companies are the bigger banks like Bank of America, and you just got to be careful.
Yes.
Because the thing that I want you to understand is, I'll ask it as a question, is do you think who the lender matters? Why do you say that to me?
Well, I think there's just from my experience, I think the lender matters because if you go with somebody like a Chase or a Bank of America, they have their very strict procedure that they have to go within, and there's not a lot of wiggle room for them in there. A lot of times, if you go with somebody not as national or not as big, then they've got a little more wiggle room. They're willing to work with you more and just kind of be a little more flexible on all of that stuff, which is really helpful from a buying sense to have that flexibility.
Do you think it matters to a seller when they get an offer on the table?
They just want the cash.
Right, but if it's so here's the National Association of Realtors that stated the number one most, well, they didn't say the number one, they said one of the most important things to a seller is a word they says what they call certainty. And what they mean by it is they want to be certain that if they take your buyer's offer, it's going to go to closing. And so, is it a fact that some mortgage companies don't go to closing on time? Right. So a lot of your you can ask other agents in here. They'll tell you it absolutely does matter. If they're a listing and they've got offers coming in, who the lender is absolutely matters. Because it doesn't matter what price you're offering. If this lender has a horrible track record of closing, then it's not worth it. I've had even in this office listing agents who will counter. Counter number one says get pre-approved with somebody local because they can't afford it. Because if they take that house off the market, and something doesn't happen on time, it hurts the seller financially, right? Because they're trying to make all their other life decisions based on that. So who the lender is does make a difference, and it can cost you your offer accepted in some cases. Because again, the National Association of Realtors has identified they want certainty. So I would tell you that a lot of home buyers, if they come to you already pre-approved, that does not mean that, again, you're the trusted advisor, you should still inquire. Because, and I'm trying to not make it sound self-serving for me, because it's not. I want it to be for you guys, because I've seen this, where somebody gets pre-approved, and they went to their bank because they didn't know what else to do. And then the real estate agent was like, okay, you're pre-approved without asking any questions. And then it's an online lender because they didn't know. Most people go get pre-approved before they even see me. Probably 7 out of 10 times they're already pre-approved, but then once I get introduced to them, they make a change to us because we do things differently. We ask better questions. They immediately know that we're not a order taker like some of these companies where they just make an application, here's your pre-approved letter. By the way, Isaac, let me know if you have any questions. And you're sitting there going, well, I don't even know what to ask, right? So we take a little different approach, but especially if it's multiple offer situations, who the lender is. And I did ask this years ago with agents on a scale of 1 to 10, how important is who the lender is on a financing when you're evaluating multiple offers? And they all said 10. I said one even said 11. And she said we go through and look at literally who the lender is as we're going through. And if it's like a bigger company that doesn't, because it's all about accountability. If you go to a Bank of America and that guy misses the closing date, you think he really cares. He doesn't know who you are. He's not losing anything, right? Now it's not great, and it's not like they try to miss the closing. But you think if I'm sitting in this room here in front of Wednesday's group of 40 people between Zoom and in person, if I miss a closing, do you think it affects me? Yeah, I'm probably gonna. Word travels pretty darn fast, right? So any local lender has more accountability over any national lender. And I'm telling you, local lenders do help you when it comes to negotiating some of those. Anyway, I just share that because again, as a trusted advisor, it's easy to go, oh well, they're already pre-approved and done with it. But who the lender is can make all the difference in the world. So that's where just encouraging them to get a second opinion. Because just like everything else in life, you got your biggest financial purchase ever is similar to other major events in your life where you do usually check out a second opinion. Okay, so what I want to go through with you now is loan programs. I don't want to bore you with this. In general, I would just give you a high level and tell you that I want to be a resource for you. So as you get into situations and conversations with clients, you can always rely on me and the team to talk to you and give you information accordingly. But again, back to the fact that you guys are the first line of communication with clients. You do have to arm yourself with enough to get, have a decent conversation. So with that being said, there's different loan programs. So we got a conventional loan, FHA, VA. So conventional is typically going to be your best option for clients if they qualify. The one thing that's changed with conventional financing, it used to be a minimum credit score of 620, and that has changed. There is not technically a minimum credit score. It's all based on risk tolerance. So if somebody has less than a 620 score, but they're putting say 20% down, assets they can possibly improve potential. So that's actually a good thing for your buyers. Another good program is FHA. FHA, one of the biggest misconceptions with FHA is when you're talking to a first-time homeowner, a lot of people think the FHA program is the best. I usually ask the question, for first-time homebuyers, what's the best financing option? And most people will answer, oh, that's FHA. And that's misconception, misinformation. FHA is a very, very good program, but it's really geared for clients who have lower credit scores. If a first-time homebuyer has a higher credit score, all day long, conventional is better. But just to give you an idea here, I did this math like 10 years ago, so using a $200,000 sales price, which today is a lot higher. But just think about this: on a $200,000 sales price, you've got a first-time home buyer who's putting the minimum down, which on FHA is 3.5%. Conventional is 3%, so very similar. The FHA buyer will pay $46,000 more over the life of the 30-year loan versus on conventional. $46,000. That's 25% of the price of the home. That happens way too often. And I can tell you, I had a girl who she got pre-approved with the bank, and her real estate agent at the time did a phenomenal job of just saying, this was, not to use names, but a local bank, a national bank that had a bad rap for missing closings at the time. And this was coming out of 2008. So like 2012 and 13, this bank was just notorious for missing closings. So this real estate agent knew, like, hey, we're going to have a tough time getting your offer accepted if they know you're going through this bank. So she said, hey, would you mind getting a second opinion? So she called me. And she called me and asked me, Mark, so Nancy much more with halfway at the time, she's talking now. She referred me to you. Her first question was, what's your interest rate on a 30-year fixed FHA? And when I get that question, I know immediately that person has no idea what they're doing. Because that's not what people want. That's just, she didn't know what to ask. The interest rate's the last thing somebody usually asks. And I know that's hard to understand or believe from your side of it, but it's not what, like I can literally, unless I bring it up, I can have a conversation with the client. They won't even talk about rate because that's not important. But when she called me, she didn't know what else to ask. And so I explained how we do our business, and you know, what I recommended was have her complete a loan application. We got her approved, and it was we completed that. I'd like to meet with her. So I met with her in person. Again, difference between an order taker and an actual consultant. But I sat with her and answered a lot of her questions, and I said, you know, when you reached out to me initially, you asked me about the FHA interest rates. What about FHA is important to you? And she said, Mark, I don't have a lot of money to put down. I want to go FHA. And ironically, the FHA requires 3.5% down. The conventional is only 3. So if her number one goal was cash out of pocket, she's in the wrong loan program right there. I can get her lower down payment on the conventional. The second thing is I showed her the numbers side by side. So I showed her FHA, and then I started showing her the conventional. I saved her. FHA has a upfront mortgage insurance premium. It's a fee that's 1.75% of her loan amount. In her case, I think it was $4,600. I eliminated that when I went conventional. So I saved her $4,600 in her monthly payments, $56 less a month, and she was bringing less out of pocket. So it was like a huge win. And she just smiled, like she was so excited, and she goes, why didn't my bank show me this? I don't know. The other thing I could think is, she was pretty sure of herself when she called in, and she wanted an FHA loan, and as an order taker does, they gave her what she asked for, right? Whereas I gave her, I asked questions. And so the reason I'm bringing this up is your clients do not know what they're doing. I don't mean that in a bad way, but they just don't, and they do what they think is best. And if nobody steps in, like that real estate agent looked like a hero because she took the time to say, I'd like you to get a second opinion and here's why. If that real estate agent just did what some realtors do and just go, well, I'm sure it'll be fine. She's already pre-approved. I don't want to get into her finances. That poor girl just spent $4,600 more out of pocket, and her payment was $56 right? So I want you to think about it. It's not about you. You got to make it about the client, right? And that's the difference between not every lender is equal. The other thing I'll mention about not every lender is equal is, does anybody know what the minimum credit score is for an FHA? There is actually a minimum. So I'll mention this, it's 500. And if you talk to other lenders, they'll tell you their minimum credit score for FHA might be 580. Some are 600, and some are 620. So the point is, the FHA program is 500, and our company follows exactly that. When other companies have higher credit scores than 500, it's because they add on their own extra guidelines. It's what we call overlays. And it's because they don't want to take on the risk. So again, not every lender is equal. Same thing with VA. So VA loan is for veterans. VA is Veteran Affairs. So VA loan is a great program for veterans where they can buy a home with zero money down. VA minimum credit score is they don't have it. So but I guarantee you, any other lender you talk to, they'll tell you, oh yeah, our VA minimum score is 580. Oh yeah, our VA minimum is 600. Because they have these extra layers that they put on. Our company does not. Okay? So again, not every lender's equal. So does that make sense? I put in your book here. Try to make this somewhat of a resource for you guys to read to. I'm still available. So like one of the things in here is a program cheat sheet for all the various loan programs, just required inspections. How much are you allowed to negotiate in seller concessions? So that can help cover maybe rate buy downs or closing costs, things like that. So we got that, and then various loan programs that we offer as well. I will tell you from our company standpoint, we offer every single loan program there is. We're the number one, which I didn't share this with you. Cross Country Mortgage is the number one direct lender in the whole country. The second place direct lender is not even close to us. Like we're up there. So because we are who we are, we have a lot of resources, and it's just hard to explain that. But the product is probably the biggest thing. We offer portfolio loan programs as well. So let's talk about that real quick, because a lot of your clients since COVID, there's been a lot of changes in employment. There's a lot of people who call it gig work. So they'll work, instead of a traditional job where they work 40 hours, they may work 20 hours here, 20 hours here, but then this week they'll work 15 here. They'll do what it's like freelancing. They'll go drive Uber as much as they want, or they'll DoorDash. And that's their job. Well, from a mortgage standpoint, mortgage approval standpoint, that gets a little difficult because it's variable income and it fluctuates. Some people there's more and more self-employed people out there who are 1099 based on this type of gig work. And they don't usually fit the box. The box is just the typical loan programs. So in addition to the standard loan programs, conventional, FHA, we have over here what we call portfolio loan products. Portfolio loan products basically mean it's our cross-country mortgage's own product line. It's kind of like the old school common sense underwriting. So it doesn't meet traditional guidelines. If it makes sense to us, we're going to approve it. And that's very unique to us. So self-employed clients, a lot of times they, if you look at their tax returns, if you're self-employed, obviously you try to write off as much as you can with expenses to limit how much you pay out in tax liabilities. Well, sometimes you can write off quite a bit, and if you're trying to buy a home, your net income is what we look at. So you've got your GCI, your gross commission income, you got all of your expenses, including mileage, and then your net income is what we look at. You may write off so much that there's not enough income. Same thing with your funds. So whereas some lenders would say, no, sir, you don't qualify, and no, you don't qualify, we look at it, and a lot of times we can't qualify because we have alternative programs, such as instead of looking at tax returns, we look at bank statements. and look at their cash flow. So their average deposits are X dollars. And so we can use that instead of actual income. We can look sometimes just at their 1099 only. There's a lot of different creative ways that we do it. And a lot of when a lot of other lenders are saying no, we can actually get them approved. Yeah.
So, like, I guess my question is, you were talking about how some places have like a way to kind of mitigate the risk and how they bump that minimum score that they need up. Doing these things kind of your way of mitigating that risk and kind of taking that on and kind of assuring this person being paid this.
Well, yeah. So if we're doing yeah, when we're doing these portfolio loan products, again, it's a common sense thing. So there, on these, there may be a trade-off. So like on a conventional loan, if you're a first-time home buyer, you can get in with 3% down. But let's say you're self-employed and you don't have enough income, so we cannot qualify you. Now we go over to the portfolio side, and now the risk is transferring because now we're going to require maybe 10%. So more down means less risk to us. So there's, yeah, in a way, we are mitigating the risk just based on. Now with our portfolio loan products, for the most part, they've got to have decent credit. It's not to say that because these programs are not subprime products like back in the day. That was what led to all of the problems in 2008. We were just doing loans for people who just got out of bankruptcy and all that stuff. These are not that. These are very good credit people. They don't have to be perfect. They can still have payments and still lower credit scores. But they've got usually assets and there's just compensating factors on why we would take a risk. We do these and not to say like the next mortgage company. So the next mortgage company out there, a lot of them do have bank statement programs. The difference between cross country's bank statement program and other lenders is this. These lenders, the other lenders, have to meet the investor guidelines. So when a loan goes to closing, that loan gets sold to an investor. And the investors are people who buy mortgages. And the investor is the final say so. And so if it doesn't meet the guideline, the investor will say no, and now mortgage company can't do that program. Cross country mortgage, we are the investor. We make our own decisions. So 40+% of all of our portfolio loan closings are based on exceptions to the actual rule because it's all common sense. So we're getting things approved that others simply cannot, and that's a big part of why a lot of the homeowners, like Fisher Homes, Drees, Taylor Morrison, they all have their own mortgage companies that they'll refer their clients to, but they don't do what we do. So when their buyers cannot get approved through their own mortgage company, we're the go-to provider because we're helping save those deals because we have the product that they don't have. And that's same thing with the other lenders out there. So we just think we have every program and we have less overlays or less not as stringent. We're just simply common sense a lot of our decisions.
So you guys do like I guess new builds, like there are new builds and like say somebody wanted to do like a bungalow, you can get financing for that for people who want to do that kind of thing.
Yeah, barndominiums are something we can do. Yeah, just the key is there. It's just the appraisal and what comps are available. Because if there's not barndominium comparables in the area, or they have to be in the area, it's got to barndominium has to be. Got to be able to show it. Yeah. If it's unique for the area and there's not barndominiums elsewhere, that makes it tougher from an appraisal standpoint.
Like custom build. Yeah. I just asked because I have something like that. Yeah. If you don't have something that's super common.
Yeah, the other thing too is it's got because I had a barndominium client who was interested in it, ended up not doing it, but it was in Zionsville. And 7 acres with a 1,500 square foot home on it, did not have a kitchen or a stove in the kitchen. And so it really, two problems with it. The main one, it's got to be a functioning kitchen because it's got to be habitable for us to do. So now what we talked to them about is installing a stove, which shouldn't be a big deal. But he ended up not buying it because it was just too much. But it was over the price point. Yeah, there's sometimes you just have to be careful with stuff like that. You need properties like that on the news. Okay, so let me talk to you guys about bridge loans. Heard that term, bridge loan? Okay. So a lot of people who currently own a home today are hesitant to buy because they have a home to sell first. And their down payment is usually tied up in it. Okay. Now, when you look at homes on the market for sale, you've not noticed this. Like 7 or 8 out of 10 of them are vacant, right? And that's because the seller has already purchased their next home. Because usually, if they put their house on the market today, before they buy their next home, it will sell too fast. So most people, if they can qualify, they're going to go buy the next home first, and then put the current home on the market. But then the question is, how do I buy the next home when all my money is out of the equity? So that's what a bridge loan is. So a bridge loan is allowing you to do basically a second loan on a departing residence that they own today. Allows them to pull the equity out today to use as the down payment for the next home. Okay. And on the side note to all of this is, generally speaking, if you're trying to negotiate today, if you have a buyer that wants to make an offer on a home, making an offer contingent on sale, selling their current home, would you all agree is going to be difficult? Now, Cam Mason in your office here, he just had one that was contingent, it was accepted, but the property his client was buying it was Anderson. Anderson's a slower market, and they've been on the house. I think the listing had been on for like 40 days. So that seller was just thankful to get an offer, and they were willing to give him 30 days to sell their home, and they did sell. But usually, a contingent offer is going to hurt you. So that's where the bridge loan comes into play. Now, the bridge loan, you can borrow. Yeah, I think it goes to. Yeah. Right, so. All right, so new home. Let's say they want to buy is purchase price is $400,000. Current home the value is $300,000, and they owe on the mortgage they owe $210,000. So in real life, in a perfect world, they would love to sell this. Oh, okay.
I'll come. I didn't mean to interrupt.
Oh,
I thought I started out one. I apologize.
Oh, no worries. Well, I'm supposed to be here. Right?
Yeah, no,
You
you're
are
not.
noon to 1. You got it right, Mark.
So, in a perfect world, your client would be, they would love to sell this and get their $1,000, and then turn around and buy. But in the real world, that's not feasible because contingent offers are frowned on. So basically, the bridge loan is on the current home. They owe $210,000 here. They can borrow 85% of the value of the current home. So it's $255,000 minus what they owe to $210,000. So they can borrow bridge loan for $45,000. Okay. So This allows them to pull the equity out of their current home, in this case $45,000, so now they do have a down payment. Okay. Now, not every client needs a refund. Some of them have cash in hand, or they can get a gift, and there's other ones that can come up with that money, down payment money. But this is a tool that does come into play. You guys should understand this, because this is one of those objections you're going to get from clients that puts them on hold because they don't know how this all works. Now, this is now a second mortgage on the property. Now they have $45,000. Okay. The cool thing about our bridge loan, this is unique. Not many bridge loans have this. You do not have a monthly payment with our bridge loans. Every other bridge loan out there, typically it's an interest only minimum payment that they get billed. And when you're talking to a potential buyer, they're already nervous because they're thinking in their head, oh my gosh, there's no way I would ever do that because I can't afford to have a mortgage payment here plus this mortgage payment, and now you're telling me I'm going to have a third payment work. So from a cash flow standpoint, they do not have a payment on the bridge loan, so that helps, right? They still accrue interest. The interest accrues, but we just add it to their payout when they go to sell this home. That they just care about the monthly cash flow. Right? Now, it still comes back to they're going to have a mortgage payment that they currently didn't pay, and they've got a new one. A lot of home buyers shut down. They won't even talk about this because of that fear. Again, your goal is to get them to, again, that's the objection. Their objection is financially related. The sooner in the process they can talk to somebody like me, I can go through this, and when we talk through it, logistically, how this first payment, let's say they found the perfect home today and they want to negotiate and close March 5th. Less than 30-day close. That March 5th payment, March 5th closing date, puts their first mortgage payment on this loan right here, May 1. So once I explain this is May 1, so you have between now, today, February 9th, February 9th, between February 9th and May 1st to get this home sold. Before they have double payments. Right? I would think if you price it reasonably competitive, you would get this home itself. Would you all agree? And if it's in a decent location, as long as you don't really. Well, good question. So, when we talk, like I always say this, it's never too early to have more buyers engage in mortgage. Because the mistake I see a lot of real estate agents make is they wait for that client to find the home, and then they put them in such a, I don't even know what to call it, I simply, I can just tell you right now, if I get them today, I can talk through all of this. They're going to buy faster. Because I'm eliminating all their, like, everybody has concerns. That's one of the things. My favorite questions to ask is, I understand, Crystal, what's your biggest concern going through the whole process? Right? I get to talk to you early enough. I get to have that conversation. I know what your outlets are. Everybody has a concern. Like, literally everybody. And the funny thing is, in probably the 7 years I started asking that question, not one time, literally, I had a concern that applied to that client or was either bad information or it just didn't apply to them. And we talked through why it doesn't apply to them. Oh, okay. So now guess what? I just lowered their fear to the point where now they you start lowering. That's my job. Honestly, that's really what your job is as well. Is from a 30,000 foot view. This is a very emotional process. Would you agree? So I look at our job together is to manage the client's fear and anxiety as they go through the process. And you can do that a lot of different ways, mainly through communication and anticipating what's in the head and asking the right questions. Again, orders and lenders don't get this far. And that's why some of your buyers, I've heard realtors say, well, gosh, no, he's so picky on it, he hasn't found the right home yet. That's not what it is. I mean, it could be technically, but usually it's not that. They're just afraid to jump in. Yeah, they are pre-approved. Yeah, they started the process. but there's some level of financial hesitancy still inside you. Or you've got a client who makes an offer, but it's not a strong offer because there's nobody's really overcome the concerns. So going through a thorough consultation will help. But walking them through the logistics. Like I've had clients flat out tell me, Mark, there's absolutely no way that I would be able to. Before we end the conversation, I got my way of not pushing people, asking better questions. We circle back, and they are at least open to talking about it. As soon as I talk about this, they go, oh, I didn't realize that. I guess we could do that, right? So I have a client who told me no, where most people would say, okay, then I won't talk to him about it and versus over here, I got him to at least listen, because that's all I'm about is they've got to understand their options. I don't care if they do it, but they're making decisions based on wrong information or no information because it's fear-based. So you can see where I'm helping you guys convert your clients. Right? Does that make sense? Because I know it's a little bit confusing on how we're taking money from this.
I'm kind of going through hypotheticals here, but it does make sense what you're saying. So, same scenario. What if somebody refinances and that value is different, same value? Like, would you go based off that math, or is a refi something you guys
Well,
kind of?
you wouldn't refinance this mortgage if you knew you were going to turn around and sell the home. Because technically, as an industry, if you do an actual refinance, you're really obligated to make 6 payments on this before they can sell the home and pay us off. So that's why the bridge loan is there. So we keep this loan as is, the first mortgage that they're going to have as is, and we just do the second one because this is a short-term loan designed just for that reason. Yeah. But also, yeah, so let me take a minute, so I know we only have a couple minutes before we gotta wrap up. Is there anything additional that, because this is important, guys, this part of it, this should be really a conversation that every listening appointment that you have with somebody on today, because this is one of the top objectives people have, is they think they have to sell before they buy, because they don't understand how it works. And if they hear the word bridge loan, there's some people who are going to shut down. So my point, what I said earlier, is the sooner I get introduced to them, the sooner I can have these types of conversations. Because what you don't want to do is wait till they find a property. This happened years ago. It was actually here. I was out of town at a coaching program. A lot of money to be there. I went up to my room at lunchtime to brush my teeth and get ready to go and back out. And I get a 911 call from one of my realtors. He's like, hey, Mark, my buyer needs to make an offer. I need a pre-approve right now. There's another offer on. They only have until 5. So I'm like, should I skip the class that I paid a lot of money for to serve my client or whatever? So I do. I did that. I called the client right away to get him pre-approved. And they go, no, we're not ready to get pre-approved. I got a house to sell first. So the realtor and the client are not on the same page. Call the realtor. He calls them. Realtor says, okay, now they're ready. So I take their application, got them pre-approved quickly. Got the offer in, boom, got it accepted. I look like let's call it a Wednesday, the client backs out. The client's actually pissed at the realtor. And the realtor lost the buy and the list of all they had to sell. And the reason was, and by the way, the realtor in the conversations, he said, I've been working with them for 6 months. Can you imagine the anxiety that realtor put that client through to push them into something they weren't prepared for because he waited last minute to get them approved, and they had buyer's remorse. He lost 2 sides to that, and that's just what I tell you is just I tell you that because you got to put yourself in the client's shoes. It's a very emotional process. The anxiety level can go very high, and again, out of respect for them, you got to get them take the lead and be the trusted advisor and get them to the right people early in the process. And I don't care if they say I'm not buying until October. Today's a perfect day to at least inquire and learn. Right? Yes.
Why are they hiring conventional?
Good question. Yes, it does. It depends on how much equity they're going to borrow. They're going to borrow the maximum. They need a 640 credit If they don't, if they have a lot more equity, they don't need to take all the equity, then they would have a 6. Yes, typically a little bit. Okay, we got 2 minutes. We'll wrap up. My contact information is in here. In fact, the beginning of the page 2 here is all my contact information. So it's also how to refer. So if you have a client, I've got QR code right here that has all my contact information. The best ways that we have found to introduce a client to us is either through text, the number in there, or I can call that number or email @teamkuchik.com. That's what we found is best because if you do a group introduction, you're going to find that your client will. If you, Jenny, by the way, you do a fantastic job. Jenny has a amazing way of introducing clients to us. And messaging is one that I feel like if I were a client, they feel secure in that. It's a great message. So,
Thanks.
probably one of the best episodes, to be honest. So, if you guys have questions, again, I want to be a resource for you. A lot of like, you're going to come across scenario after scenario that you're just not sure of. I will help you. Right? And the objections is I kind of like the thing I'm on right now because I just think it's lost opportunity for you guys if you don't know how to overcome them or not effectively overcome them. But again, I go back to it's not about your commission that's being put on hold. It's that poor buyer who is waiting because they don't know any better. And then they finally get enough confidence to come back to the market and they realize, oh, now home prices are up. They're the ones who actually lose on that. All right, guys. Thank you. Thank you.
Thanks, Mark.
Oh, I see. There's awesome there. Let me tell them I'm finished.
Inspections. No, no icebreakers.
Just jump.
Hey Mark, before you leave, can I take a picture of you kind of at that end, and I'm gonna get everyone in the picture?
Sure.
I meant to get in here before you finish, and I did not.